Welcome back to another weekend deep dive. My name is Justin, and this weekend we're going to try to ask ourselves whether or not the stock market is going to be writing a love letter 2.0 to not only Jerome Powell, but to Joe Biden and the broader market. We're closing at another record high across the board. Everything rally is underway. So again, this weekend we want to try to answer whether or not we're going to keep going higher, and whether or not Tom Lee at Fundstrat's 5,000 target going into early 2022 is realistic. This weekend's video is coming out a little bit later just because it took me a little bit of time to try to do a backtrack and see how can we reasonably get to 5,000, and is it probable and possible. As always, if you're enjoying the stream at any moment, I would enjoy a thumbs up and make sure to drop a comment because we do give away prizes. So I'll circle back. I think I'll just do it right now, actually. So again, pretty excited for this weekend's video. I want to thank our audience and our viewers for supporting the channel. We now have more than 1,300 subscribers, and last weekend's video was pretty realistic. We've had another record rally. QQQ notched up its best back-to-back gains ever. I believe it's 9 back-to-back gains. So we're going to pop over here to the video and thank random comment. I chose Bustin' Keaton because had the most likes, and it's a pretty relevant comment. So, oops, let's go back to here. Not quite sure what happened. Anyways, there we go. So we've got Buster Keaton. Thank you for supporting us, and we will reply back to your comment here. But make sure you email us at info@blazecapital.com if you want to claim your prize. All right, let's go forward. So again, some pretty big numbers here, right? We got a love letter to Jerome Powell 2.0. Why? We're at a record close. And this is a really high number, so what I'm going to focus on this week is probably going to be a little bit more of news articles and analyst ratings, just because I think the charts matter a little bit less. So let's have a look here and see exactly what Tom Lee is telling us. We're entering the 6 weeks that matter the most, and then people start talking about the Santa Claus rally. Lee said at halftime report, referring to the market's typical strong performance over the final 5 trading days of the year and the first 2 of the new year. Lee's year-end target for the S&P 500 is 4,800. The broad equity index finished Thursday at 4,680. It was trading above 4,700 on Friday, its 7th consecutive positive day. Over the past month, the S&P has been up more than 8%. The benchmark is up roughly 25% year-to-date. I think 4,800 is maybe the minimum year-end level for the S&P 500, said Lee, co-founder of Fundstrat's Global Advisors. I think 5,000 is more of an early 2022, but I think easily 4,800 is achievable. I think seasonals tell us it's about 5 or 6% upside from here. Whoa. That's a high number, right? 5,000. So he's talking about maybe leaving the 4,000s behind in early 2022. Tell me what you think by dropping a comment. What do you think? Are we going to be at 4,000, 5,000, 6,000, 10,000? Going into 2022. All right, now we're going to circle back and have a look at a couple of news articles here just to try to figure out whether or not there's actually any bull catalyst here. So the House passed a $1 trillion bipartisan infrastructure bill that includes transport, broadband, and utility funding, and sending it to Joe Biden's desk. That is after the close on Friday, and it's meaningful. So we're going to go through here a little bit faster and just read the articles here again. These are from Saturday from Joe Biden. Biden calls infrastructure bill a once-in-a-generation investment that will create millions of jobs. Infrastructure spending will ease inflation, Biden says. Okay. Biden says bill will allow for construction of 500,000 electric charging stations. Whoa. Biden's call for a blue-collar blueprint to rebuild America. Vast majority of jobs created won't require a college degree, Biden says. Whoop. Right? No education, no problem. We got a little bit of economic data this week, including initial jobless claims, industrial production, ECB forecasts, and Jolt's job openings, but it's really going to be about the Fed. Biden meets with Powell, Brainard, and White House as he weighs Fed pick, right? Super Dove and Dove. So why does this matter? Let's have a look here. Who are the voting members at the Fed? We're not there yet. So these super doves are the people who like printing like there's no tomorrow. We've got Powell, we got Brainard, we got Williams, we got Evans, and we got Kashkari. But these are the voting members, at least as of 2021. What does that mean? Brainard is right here with Powell. Nice. Now we got another article here from CNBC. Biden meets with Fed leaders Powell and Brainard as nomination decision nears. He was asked about this at the COP26 meeting in Europe. So what do we got here? Again, I'm just pulling some excerpts. You can feel free to read these articles or pop over to Slack if you want to see more. President Joe Biden met with Federal Reserve Chairman Jerome Powell and Governor Lael Brainard this week. The Democratic-controlled Senate would likely confirm either as Fed chief. Whoa, what are they? They're printing, right? That's what they're great at. They're like, yeah, if in doubt, print more. And yes, if you haven't already, smash a thumbs up. Let's print some likes. The Republican Powell could face resistance from progressives, and Democrat Brainard could face opposition from the GOP. What does this mean? Having a Republican Powell, a Democratic Brainard kind of gives both sides what they want. It's more of a centrist view right now. And to get this infrastructure bill passed, that's what was required, having more of a centrist view to appease everybody on both sides. Brainard is widely considered to be the top candidate for the open vice chair for supervision post if she is not tapped for chair. We also know that there's been some controversy at the Fed, notably with the vice chair, Clarida, and the chair Powell after the other two people got fired, notably Rosengren. I forget the guy's name from I think it was from Dallas. I forget his name right now. Anyways, they need to get some credibility back to the Fed. So I think that if Jerome Powell stays and Brainard is the vice chair, that would be very, very bullish for the stock markets. I'm not here to discuss politics. I'm not here to discuss what it would mean for the economy. I'm here to talk about what it means for the stock market, our beloved stock market. Why? We want a love letter 2.0. And maybe we can throw in a woman here with Powell. Yay. All right. Jumping forward here, Congressional Progressive Caucus Chair Representative Pramila Jayapal, Democratic from Washington, said the group reached a deal to back the infrastructure plan in exchange for a commitment to take up the safety net bill no later than the week of November 15th. What is that? That's monthly OPEX, right? It's like it lines up almost every damn month for OPEX. A group of 5 centrists separately issued a statement saying they would back the Build Back Better legislation pending a CBO score that assuages their concerns about long-term budget deficits. What does this mean again? Read it right here. 5 centrists separately issued a statement. That's how the infrastructure bill got passed. So if they toe the line by having a Democrat and a Republican at the Fed, I think everyone's going to be happy, everybody would be appeased, and the market's going to be especially happy. In a statement after the House vote, Biden said the legislation would create millions of jobs, turn the climate crisis into an opportunity, and put us on a path to win the economic competition for the 21st century. He also noted that the procedural vote on the second Democratic bill will allow for passage of the Build Back Better Act in the House and Representatives the week of November 15th. Again, monthly OPEX, and there's some options clue evidence to tell us that we can break over 475 going into that monthly OPEX week. So again, we're going to talk about that a little bit later because I know the options tend to get people a little bit confused. So I'm just telling you, we can easily blow through the 475 level that I called out last week as potentially a short-term top. The House is out of Washington next week, meaning this week coming up. So they pass this thing on Friday night like they normally do at the 11th hour and under a lot of pressure. And it could take the CBO days or weeks to prepare a score on the legislation. Why does this matter? It's the Congressional Budget Office. So what they're telling us here is that tentatively we have a deal, Biden can sign one of the bills, and all it's going to take is that CBO score, and it could come within literally within days. So again, just jumping forward to here, the measure passed in a 228 to 206 vote. Again, it's a pretty okay beat. 13 Republicans supported it, while 6 Democrats voted against it. Biden can sign the bill within days. So, right, could cause us some juice into the early part of the week. And when and if we hear about those new Fed chairs, again, Biden was asked about this on Tuesday, and he said a decision was coming fairly soon. So what could that mean? I don't know, but there's some bull catalysts I'm noticing here. So Tom Lee might be right. And Drew from our group really likes Tom Lee, so maybe we're going to go to 4,800 and 5,000. So we've got a few things on deck here because the economic data is a little bit light. And to finish off the story here, there are a little bit, there's some earnings coming out, but again, the bulk of the earnings is now done. There are some notable names in here though, including PayPal, I don't even know, like PayPal, Palantir, Neo, Coinbase, Plug, right? Blink on the news about those charging stations. It'll be very interesting to see how these companies are positioning for that. We got Win, we got Beyond Meat, we got Sophie, we got Wendy's. There's a few companies in here, but like nothing that really like stands out to me as being critical to us going higher. If they all missed, it's none of these are really in the S&P 500. So again, this is more for sentiment. It's not so much for actual market direction. So in about 10 minutes, that is your bull case. That's how we can get higher. All right, next thing we're going to look at here is going to be SPY. Then we'll go through the ETFs and indicators. Then we'll have a look at option clues. And then I think we're done. There's also some member-only analysis if you're looking for more information or another bull case that I've been using since the low at the high 420s and low 430s for us to get here. That includes member-only analysis that you can find on Slack. And if you're curious about what that means, click on the link in the description to find out about your 7-day free trial. As of right now, I'm on track for my best month of the entire year. That's only in 1 week, which is November 5th. And I forgot to show one thing here, S&P seasonal chart. So what I wanted to show here is that part of the reason why I got bullish into this last week specifically was because of this chart right here, right? We blew through that all-time high. We advanced dramatically. And this tells us that we could potentially be due for a dip. Again, it looks like another W would be formed. So in my opinion, dips will be for buying. And as we have a look at these monthly charts, just note the levels, the monthly and weekly. When we're notching up more support, notably every 5 points, those become strong support areas as we go higher. If we were to get a cut, I have a strong suspicion that it's going to get bought up. Why? For the first time in quite a while, the market's actually into extreme greed. So we went from only a month ago being extremely fearful to being greedy to now extreme greed. And now we're closing out at 85. The market might want to cool off a little bit, but I think we can actually push higher and then start to flatline. So what does that mean? We're going to hold the gains. Why? We got all these bullish catalysts showing up. And again, the market just loves this man. Jerome Powell just loves him. And with more stimulus in a liquidity-driven rally, would it not be reasonable to assume that we can go higher? And the analysis has been on point until here, so I'm remaining long. I was fully invested as of last Friday close, and it has printed a dramatic amount of money into my portfolio. Again, one more time, if you want to join us for a 7-day free trial, see exactly what I'm buying and selling to drive my performance, or if you're just curious on what we do beyond YouTube, just click on the link in the description to find out about that 7-day free trial. It should be the top comment and also in the description. All right, so now we got the fundamental backdrop. Let's have a look at the technicals. We're going to look at the monthly chart here first. We have bullish continuation off the strongest month of the year. October. It's the biggest candle, it's the biggest advance, and we have fresh continuation. We're now over the upper uptrend. That's pretty damn bullish. So again, as long as we hold, I think it's 465. That's bullish. It's a 423% extension off of the dip that we had going back to here. It's mega bullish. It's mega bullish. Last week, we were looking at this megaphone here where I was calling for 475 apex into the November 19th weekly close, which is going to be monthly OPEX. And we're seeing some huge activity on the chain that tells us that we can advance there. And the bull catalyst could easily make people look back on November 19th and say, hey, we got stimulus, we got Powell, we got more reasons to go up, price target upgrades. There's no reason why on November 19th or in roughly 2 weeks, we can't look back and rationalize the move higher. On the weekly chart, 475 apex is coming up, and the question here is, can we actually break over the upper uptrend or over this channel and then back test it? It's almost exactly what we did here on the hourly chart. So I just want to pop over here for a minute where we hit the bottom, top, grind up to the top, pop over the top, back test it, and it looks like we're ready for a break up. So that's pretty much what I'm looking for here on the weekly. We can grind up, pop over, and then back test. That's what I think is going to happen, at least as of right now. Again, it's not like this is a guarantee, but the odds are in the bulls' favor. The bears are MIA. I don't know where they are. They're MIA. Looking here on the daily chart, we now have a stairway to heaven. Why? We're in the promised land. We blew through the all-time high at 454. We got a one red day to get us started here, and then only up. So if we were to backtest, I could see that roughly 465 as an important area, which is the monthly flat. It's flat on the monthly. Looking here on the hourly chart, we now have some early close into the first half of the week. After the close on Friday and into the weekend, we now have some bullish catalysts that we're going to be focusing on into the early part of the week. Notably, that $1 trillion infrastructure bill getting passed. So if this is actually going to be a buy the news, what we're going to see is an advance over 470 into the afternoon on Monday. And then into Tuesday at 2 p.m., we should be over 471.5. Those are the key areas and times to be looking for. Finally, what I want to point out here is that we are going into not only that, but also, let me actually pull up the article here, because I think it's actually important we look at it. November 8th, here we go. If we didn't already have enough reasons to be bullish, here's one more. Why isn't it pulling over? Oh, there we go. U.S Lifts Travel Ban, November 8th, allowing vaccinated international visitors into the country. And then I also forgot we got the Pfizer vaccine, right? Here we go. So again, travel's reopening. We saw huge earnings from Airbnb, Expedia, and from Uber. So those three companies all together are basically signaling that if this travel ban is lifted, people are going to be traveling. And not only that, we're seeing that Pfizer says its COVID-19 pill with HIV drug cuts the risk of hospitalization or death by 89%. What does that mean? This is basically because the kickstart to the rally when we heard about the first vaccines getting released. This now gives us a reasonable expectation that the market can reopen, it can hold, and we can get over this stupid virus already. That's what I would really like to see. So 2 more bull catalysts that I forgot about just because it's been so busy. All right, flipping back here too, now we're looking at the heat map, which is going to tell us the performance over a select period of time. So here, the first one we got here is going to be, where's the year-to-date one? Year-to-date, so it's pretty much the everything rally except for credit cards and for telecom and select entertainment. It's very bright green. Next thing we're going to look at here is going to be the 1-month performance, where those pockets are getting more red and the rest of the market is getting greener. So more red, more green. What we're seeing here is clear rotation. And we're going to have a look at this as we look at the ETFs and indicators on the next slide. Here on the 1-week performance, again, the trends are starting to reverse a little bit, catching a bit here for credit cards. Healthcare got a huge stomp. Pfizer got a big move higher. Merck and other companies got a big suck, including Moderna down 30% because they don't have anything new. Pfizer's the one with the pill, 89% efficacy. I can't tell you how much hope and optimism that can provide to the world, not just to the US. So we're clearly seeing that NVIDIA is the leader of chips after Qualcomm also delivered a crush on earnings. So chips leading tech, tech leading SPY. That's exactly what we want to see. All right, now let's look at the ETFs and indicators to see whether or not the story continues. It does. All right. First thing we're gonna look at here is going to be QQQ, or the triple Qs, the Invesco managed tech ETF. We got a weekly bull break. Boom! Right? We got a tiny little wick here, roughly the same size wick at the top. Fat real body. That is a bullish candle. Roughly 403.5 is going to be our blue dotted line at the top here, or our 261 Fibonacci extension off of the February high to the February low of last year. Actually, I think that's of this year. Yeah, of this year. There we go. And then 387 would be roughly our weekly uptrend for this next week. If we were to get a back test, roughly 387 or flat on the week is going to be that level. Now looking at the second most important ETF inside of the S&P, we're looking here at XLF. So the reason why we're looking at XLF next is because when tech goes up, we generally see financials fade. Look at the last 2 red weeks. Look at the last 2 green weeks. These candles are dramatically bigger than the declines on XLF. Why does that matter? The market's advancing. So after hitting the 161 extension here off of the June high to June low, we're now just starting to crack the uptrend, putting in a lower high and a lower low. But this is fine. It signals rotation to tech. That's exactly what we want to see. Financials have been crushing it year to date. Now it's tech's time to shine, lead, and drag us higher. XLV or healthcare, we're seeing a shakeup after the Pfizer news. we have one winner and lots of losers. However, collectively between the ETF, we're only down by about 1 point or 0.72%. We've also backtested and passed the roughly 131 resistance from the previous push. What does that mean? It's bullish. All we got to do is advance. Higher high, higher low, and indecision with a roughly doji. IWM, it finally did something. So what does that mean? Chips lead tech, tech lead SPY, and then QQQ goes green, makes a new all-time high, and then IWM joins the party. What does that mean? It's the everything rally. It finally did something after a year of going nowhere. It broke up. Nice. New all-time high bust. New York Stock Exchange, or the 2,000 stocks that make up this composite, are also making a record close and a new all-time high. What does that mean? Everything rally. 2,000 stocks collectively hit a record high and a record close. RSP, or equal weight S&P, record close, new all-time high, but it's also outperforming NYSE. What does that mean? The S&P is flexing, right? It's flexing. FXI, risk off after the COP26 headlines, and TINA prevails. What does that mean? There is no alternative, right? Move over, China. We got a new king. Next here, we're going to look at DIA, or the Dow. I think this emerges as a leader next week on the November 8th, my apologies. November 8th, travel reopening. I think it's going to be a big move higher. So again, if we see weakness in some sectors, I really want to see the Dow advance. We saw double-digit gains on Airbnb and on Expedia, which should be leading the move higher. I believe collectively between most of the airlines, they were also up by about 5%. Looking at XLE, it is still advancing. It's over the relative low. It's digesting this move right here. It's got a lower low and a lower high, but it closed green. So what does it mean? It's fine if it just holds here. There's been a lot of talk about OPEC discussions, trying to get the taps reopened to start production again, but I don't think it's really going to matter, right? XLE can do whatever it wants. Jerome told us that he's there to support us. That's all that really matters. XLU, again, utilities are included in that infrastructure bill, so I would assume that XLU is going to continue to advance. I'm expecting more upside. Looking at TNX, or the 10-year Treasury note, what we can note here is that it pushed lower to test the inverse head and shoulders neckline, which we can see here from all the way back to 2019, and then more recently here on this cup with a handle or a rough IHS. If we start to bounce off of here, it could pressure stocks in addition to rotation to travel and reopening. What does that mean? Tech might have a soft week. We've now pushed over 400. If we can't claim QQQ 400, maybe travel's going to be the leader for this next week. There were some notable losers going into Friday when we saw travel really pick up, including Zoom and DocuSign, two stocks that are very tied to work from home. We've looked at IWM. Now we're going to look at Arkk versus GTEK. And again, if you guys haven't already, please make sure to smash the thumbs up and take 2 seconds and drop me a comment. Again, every random comment qualifies for the Amazon prize. So the reason why I'm including Arkk and GTEK in this review is because I don't know whether or not Cathie Wood is really still the leader of momentum. Why? She's kind of sucky lately. It didn't even make a 52-week high. It's not bad. Look at the move from 30 to 150, then backtesting 120s. It's not bad. It's poked over the 50 MA on the weekly here, but I can't hold it. So if we look at GTEK, which is the Goldman Sachs Future Tech Leaders Equity ETF, it's clearly moved higher. So maybe momentum and growth is no longer best represented by Arkk. She's heavy into some names that have been just on an absolute stomp lower. So I'm looking at GTEK for leadership here, putting in a 3% week. That's nice. New record close as well. Finally, for the risk on sentiment, we're going to be looking here at Bitcoin. What I note here is that we got 3 back-to-back dojis as we digest the 60 to 65,000 range. We're going to open up a new candle on, I believe, Sunday night, and I'm expecting an advance higher. Why? I just think we're going to go up. Why not? Right? Let's get some new highs. Let's go. All right, so now we've looked at most things here. What we're going to look at next is going to be option clues. And at about 25 minutes, I'm doing really good on time here. So this is the part that gets a little bit more complicated. So if you want to just end it here, all I would appreciate is if you could just smash that thumbs up and drop us a comment. I know I've asked a few times in the video, but it really goes a long way to support the channel to grow to make sure our message and our analysis hits more traders. If you found any value over the course of this channel, please make sure to support us. I would really, really, really appreciate it. What we're going to note here is just that it's mostly at the money for Monday and Wednesday, which just means that there's no clear direction, right? It's roughly equal, so I'm not going to read too much into this. It's mostly at the money, few points above, few points below. Doesn't really matter. Looking out to Friday, which is going to be our Friday monthly close, here's where we start to see some bullish activity emerge. We got 470, 475 call spread versus a 470 to 465 put spread. This is notable though. This looks like a spread from 470 to 475. This just looks like peppered in, right? People are just choosing random levels. Next, we're going to be looking at the November monthly. We got a 470, 472 call spread with open interest, and there's not really much going on the put side. So what does that mean? It's a matter of how much up we go. Second thing I would note here is that into November 19th, we got a 475 break even on the 472 calls. Why? 472 plus about 220. It's about 470, 450. I'm calling it 475 because these guys want to make a little bit of money too. On the 470, these are break even at about 473 here. So 473, 475 does seem likely. As we go further down, there's going to be another screenshot beyond the 16s for the November monthly. Just give me a moment and I'll get there. December monthly, now we see some bullish activity emerge. We got 465 to 475, but it is muted otherwise. So it's only 30,000. Everyone's kind of just focused on the short-term move. All right, QQQ. What do we got here for Monday and Wednesday? It's mostly the same. It's at the money here for Monday. Into Wednesday, we can see we got a little bit of puts, but it's basically muted. And then into Friday, feels good, man. We got 405 calls coming in heavy, 57,000, right? Yikes, that's a big, big number. As we look out here to QQQ on the November 19th monthly, now we're seeing that there is a straddle. So why does this matter? Because a 400 straddle with $10 in premium implies 410 or 390. So if that 405 gets cashed up, I would assume we're going to 410. And after we look here, looking at the QQQ December monthly, now this is where there's actually flow coming in. It also looks like they're building a straddle here, but they're very focused on the call side. And it looks like pretty much just like naked buying here at 400. So again, $10 in premium also tells us 410. Oh, 410. Yeah, 410. We don't see 410 here because it's beyond the 16s, which just means 8 strikes above and 8 strikes below. I'm just focusing on what's likely going to hit. What's the most probable? Looking through here, we're going to be seeing a $100,000 plus bought this week, sorted by expiry. Again, going into, there's a lot of puts here, right? I don't know if these are even going to do anything. Again, this isn't the 12th, which is going to be the Friday. What really sticks out to me here, though, again, these are just sorted by the date. I want to focus in on this block right here. Let's look at the date they were bought on the 5th of November between 10 o'clock and roughly 11. And that says we were at the record close, right? We were here at, right, 469, 469, 470, 470. So they were buying these things as we were like at 469 and 470. And this is big, right? 477, they bought it like galore. They were buying these things galore. So after I noticed this, I looked further. So this is what I primarily want to focus on. There's some puts here, right? I don't know, really, it's really going to mean anything. That's out till December, so these are sorted by expiry. So now, finally, when we look here beyond the 16s, I'm noticing a 470 and 477 call spread being built. Looking beyond the 16s, we can now see that the call buying from Friday at 10 to 11 a.m. So this is a brand new buy, and it implies 478, basically kissing distance to that 480 with open interest. So Tom Lee might be right? And we might hit this in November, which means maybe we even go higher into the end of the year. So this starts to look like a blow off top, which is part of what I included in our member only analysis, where I was calling for a grind up, a blow off top, and then some consolidation. So reasonably, there is some evidence that we can make it to beyond 475 in the next 2 weeks. Isn't that incredible? It is to me. All right. I think that's it. So all I'm noticing here is that I think that a lot of people are very, very... sorry, let me say this. So if we go back to the Fear and Greed Index here, I think that some people are concerned that we are climbing the wall of worry and now we're over it. So On Friday, I was even feeling it a little bit. The gains seem so easy right now. So if people are already skeptical, I think the move lower on Friday to fill the gap can be explained by only looking at that call buying. So they sell the calls between 10 and 11. That's when we went down to fill the gap in the next hour. So we fade down into the next hour. They burn those calls to scrape them and make sure they're going to be able to afford to buy them. Afford to be able to pay them out. And then they let it rally back up into the end of the day. That's how I explain the move on Friday. They filled the daily gap. There's no gaps after pushing off the new all-time high. And now we're looking for more. So sell the calls, burn the calls to cover the exposure of the underlying, and then allow it to go higher. So let's just have a look here at one more chart, and then we're going to leave it here. So we got gaps on the chart, but since we went to blow through the new all-time high, there's no gaps on the chart. So advance to the all-time high, back off to test the all-time high, and then no gaps on the chart. So if we didn't fill this gap, it would look a little funky and feel a little bit more extended. We got gaps down here, but those can be tested later, right? Let's test those when we finally get that big recession. So with that said, I would really appreciate your support by, again, smashing the thumbs up and drop me a comment. Thank you for tuning in, and I wish you guys all the best of luck this week. If you want to join us for a 7-day free trial to see what we do beyond YouTube, again, you can click on the link in the description or the top comment. Thank you, thank you, thank you.